The market has reached a particularly dangerous turning point as we see that indices are finding it very difficult to resume their previous uptrend and apparently want to turn bearish again, triggering a possible sharper correction. How low could the indices go if they actually correct? Would this be just a correction or a real bearish reversal structure? That's what we're gonna see in this video. But first, welcome to the Finance Hydra channel. My name is Nathan. So let's start our analysis looking at SPY ETF daily chart over here. Well, the trend is still bullish. SPY is still making higher highs, higher lows. This is a classic bullish structure, right? Higher highs, higher lows. If we actually see lower highs, lower lows, then okay, SPY is going to turn actually bearish on the daily chart, and we're gonna see a sharper correction on the weekly chart, probably. However, SPY, although it lost the 21 EMA, the exponential moving average on the daily chart, we have yet to lose a very important support level at $443.90, if you want a very specific number, okay? 443.90. This is our most important support level. SPY has yet to hit this black line over here, but if SPY actually loses this support level, which was a previous resistance level over here, 1, 2, 3, 4 times, then okay. Then I believe SPY is going to trigger a sharper correction, possibly on the weekly chart, which we're going to talk about later. Right now, QQQ is facing a similar problem. However, it feels like it is trying to find a support level above the gap area over here, $368.63. That's our major support level. It is a gap support level, and it feels like we are trying to react over here. However, similarly to SPY, apparently the 21 EMA is also acting as a resistance level over here. We hit the 21 EMA here, and here today again, and we failed in breaking this resistance level. Therefore, what is this, guys? This is called trap zone. It is a classic trap zone. We see the 21 EMA as a resistance level, and we see a previous support level over here. Since QQQ is actually dropping right now, the 21 EMA is also dropping, and it is going to squeeze the price more and more as time passes in this area over here. And eventually, sooner or later, we're gonna see a breakout. We just don't know to which direction this breakout will occur. Now, if we take a look back at SPY over here, SPY is also finding a very hard time in breaking its 21 EMA. However, it feels like it is a little bit easier, right? Today, we did a huge shadow above the candlestick's body over here, but as far as I know, right now, the moment I'm recording this video over here, SPY is making another spinning bottom candlestick pattern over here. It did another spinning bottom over here. It is trying to make another one over here today. Maybe it will be a spinning bottom, maybe, I don't know, the market is not closed yet. Maybe this candlestick is gonna, it is going to be slightly different than what we see right now. Still, the size of the shadow above and under today's candle, it is quite meaningful because it feels like the market is extremely uncertain about what is going to happen next. Therefore, I believe that a good, meaningful bullish reaction would only occur if we see a meaningful bullish signal over here around this area, preferably closing above the 21 EMA on the daily chart on SPY. QQQ also requires a meaningful bullish reaction over here, also closing above the 21 EMA, but even if it does react, we should be extremely careful because the market is in a very vulnerable situation right now. QQQ has made a classic bearish engulfing candlestick pattern over here. 3 weeks ago, it did a shooting star candlestick pattern. So we see many top signals over here on QQQ. And this is QQQ's weekly chart, by the way. If it does correct, since we are going up sharply since March this year, any correction to one of its retracements over here would be just normal and acceptable. Meaning, if QQQ corrects to the 38.2% Fibonacci's retracement over here, we could see QQQ dropping all the way down to the $348 without actually ruining the bullish momentum over here, because QQQ is in a bull trend on the weekly chart. We are making higher highs, higher lows. So as long as we keep maintaining this pattern, the trend will remain bullish. Any pullback to one of the retracements over here would be just an opportunity to buy. Now, before we talk about SPY, let's take a look at QQQ's indicators over here, because this is looking particularly interesting. And by the way, if you are still not my subscriber, what the hell are you doing? Subscribe to this channel, because you are probably finding this video at least entertaining in some way. So come on, subscribe to this channel, click on the like button to support me as well. I really appreciate your support, my dear friend. Now, QQQ has just reached the 50-period moving average. While we see an amazing golden cross pattern over here on March this year as well. Golden cross, yes, it is a bull market for tech stocks. Tech stocks are clearly bullish right now. However, QQQ has reached its 50-period moving average again, while it has just filled an open gap over here, right? So we just reached a very important dual support level. By losing this dual support level, I believe QQQ is going to trigger a sharper correction to one of its retracements on the weekly chart. This is how I see the situation right now. Similarly, SPY has reached a very important inflection point. If we see on the weekly chart over here, we just reached a very nice resistance level, this red line over here, $458, a previous top level 1, 2, 3, 4 times. It is working right now as a support level, as a resistance level again on SPY, while we just reached the upper purple trend line over here. Therefore, we see a dual resistance level. Last week, SPY made a bearish engulfing candlestick pattern, which is a particularly dangerous bearish reversal structure, indicating that yes, by triggering this bearish engulfing, by losing the support level at $443, this is going to reinforce the idea that SPY is going to turn bearish again. Therefore, are other signals, right? There are, for instance, recently, SPY triggered a very, very rare candlestick pattern called bullish three-line strike, which, despite the name, it is a bearish signal made of this huge bearish candlestick pattern over here, right? Huge bearish candlestick pattern engulfing the previous white bullish candlestick patterns. And according to Bukowski, when this pattern appears, just wait for 3 days before selling a holding or shorting a new position. And this is exactly what happened over here. I gave you guys many details about this pattern and how to follow this trade on our Telegram channel. So if you're not on our Telegram channel, it is very important for you to join us over there, because I'm sharing very exclusive, sophisticated analysis, trading signals, trading strategies over there. Information that is worth money. The link is in the description of this video. Now, extremely rare pattern. It triggered a sharper correction on the daily chart over here. We have yet to hit our support level, $443, which, by the way, was the trigger point of this cup and handle chart pattern over here, which we also nailed on our Telegram channel. Cup and handle, the target is the height of the cup over here projected in the direction of the breakout. Target hit, we nailed it. We nailed this very good bullish reversal structure. Now we are approaching a support level again. Only by losing this support level, I believe SPY is going to trigger a sharper correction. If we take a look at SPY's indicators over here, we see that we are very close to the 50-period moving average as well, right? Which is also very close to the $443 area. This is similar to what we see on QQQ, right? By losing this dual support level, okay, I believe SPY is going to trigger a sharper correction. However, if we do react above this area, the bull trend will just resume again. Which scenario do I prefer? Well, honestly, this has no difference to me, right? As a swing trader, I see no meaningful difference between a bullish or a bearish sentiment in the next few weeks. But I believe that if we lose this dual support level, many stocks are going to reach a very discounted price level. And I believe this is going to be an amazing opportunity. If we use Fibonacci on SPY over here, we see that it could correct to the $429 again without actually ruining the bullish bias over here. And this is where I believe SPY is going to trigger an amazing, incredible buying opportunity. However, let's just pay attention to the signals, right? We are still above a support level, so let's pay close attention. I'm gonna keep you guys updated on this, so subscribe to this channel if you're not my subscriber. Click on the like button. I appreciate your audience, my dear friends. See you guys tomorrow. Stay safe. Bye-bye.